Hello everyone and welcome to today's major markets update for, is it April 27, not 26, 27, 2022. It's Wednesday and the impulse pattern to the downside is still alive and well. So we're going to track that one. And I'm sorry for the somewhat wishy-washy update on Monday. I wasn't too happy about it, but some updates are simply better than others. I'm only human. I think last Friday's update was killer, at least based on the feedback I received, and Monday's not so great. Was just thrown off a little bit by the price action. It happens. This is why if we do an update every single day, we get thrown off a lot, but I think we're back on track. So let's go straight to the charts and follow along on what is the preferred count, and which has been the preferred count for especially the S&P 500. Let's start with that one. Okay, so we started to look for this impulse pattern to the downside with an ideal wave C/3 target zone between 4143 and 4080, and we're getting pretty darn close. We had our leading diagonal A1, our bounce B2 right here in the target zone. I have 4500 to 45, potentially 4570. We've got 4509, and since then we have completely fallen out of bed. This is a classic third wave, potentially C wave. We don't know. After 3 waves lower, always expect 3 waves back up, which can be wave 4 and then another wave 5, all the way to around 4000, S&P 4000. Not a biggie. This is then still corrective, and what we have is essentially a double zigzag or simply all threes, all right, with the last C waves being 5, of course, A, B, C. So nothing out of the ordinary going on so far. Today is simply a stabilization day after yesterday's massive sell-off, and I think we're back on track. So this blip here on Monday wrong-footed me, but it was simply a wave 4. Looking here at the futures market, this was a wave 4. The wave 1 and 2 didn't really show up in the cash market. It's pretty much here, 1, 2. That's all we got. But it shows up really nice. I thought originally this was wave 4 and this was wave 5. But the market took a little bit of a detour, is tricky, and it provided us with a irregular expanded flat wave 4. This was an A of 4, B of 4, C of 4. So we got that one squared away, and now we've impulsed nicely lower. We've reached inside, this is the futures market, by the way, for the S&P 500. Ideal target zone, and looks like we're now in this wave 4 already, which could potentially have topped here, or we reached almost exactly 131.8% extension of this entire wave 1 leading diagonal measured from wave B2, and then C3 can still go all the way down to 4063. Okay, it's absolutely possible that we're subdivided lower. Wave 4 can already have complete, and also here the futures market is targeting 3950 to 4020. That would be the ideal picture perfect Fibonacci based Elliott Wave impulse pattern to the downside. So let's see how this is going to fill itself in. Also here, the futures market reached the target zones. So that's 1 out of 1. It reached this target zone. That is 2 out of 2, and we already reached this target zone. That's 3 out of 3. So let's see if the market is going to throw us a curveball or not. Again, I don't think this complex wave 4 has completed just yet. Same as I see here. This wave 3C, I have no even indication this wave 3C is complete. Moving on then to the technology sector. We've been tracking this potential wave 1 from this small lower low made in March for the NASDAQ, by the way, versus February. That was an impulse higher, 1, 2, 3, 4, 5. But today we broke below that low. Okay, so this cannot be a wave 1 because wave 2 can never go below the start of wave 1. So this was a nice impulse, and we already got below the bullish invalidation level for a further subdividing wave 1. So that means this count is now operable. This was already presented to you many times. This is now the preferred count, of course, with wave C of 4 underway. The ideal Fibonacci based Elliott wave pattern is still in play. Doesn't have to follow this path, of course not, but it would be preferred. Let's see where this wave C/3 is going to bottom. Depends a little bit on tech earnings and all that stuff. I think today is Facebook day. Tomorrow, I think after the close, is Apple and maybe Google. So all things considered, so far, so good. I like it. I prefer it. This is the preferred path until we see breakouts to the upside that don't match the impulse pattern anymore. The Dow Jones now filling in the closing based, Fibonacci based impulse pattern rather nicely. Looks like we are now in this wave C3. I would still like to see 1, 2, 3, 4, 5, or maybe a little bit more extended wave C3, then a 4, and then a 5. So the general pattern of the Dow Jones with the NASDAQ100 and the S&P 500 are now aligned quite nicely. Don't know yet the downside targets. Once we get a better idea of wave 3 and 4 having completed, we can then nail wave 5. So far, the wave 5 target zone is based on standard Fib-based Fibonacci patterns, but it looks like we're going to go a little bit lower. So we might have to adjust this one, I would say, to something like this. Okay, so this would then be a little bit lower since we already surpassed it. This one is going to be also a little bit lower. Right, this is where we anticipate, this is where we monitor, and this is where we adjust. We anticipate the standard Fibonacci-based impulse pattern. We monitor for it, and then we'll see what's going on next. Very simple. All right, A, B, C. People would call it WXY. I don't understand why that is. That's because they say, well, this is an A, this is a B, and that's a C. Well, then it's just a 3 type of corrective pattern. I'm not going to throw in more letters than is necessary. It's too complicated. ABC is the same as WXY or XYW, whatever it is, potato, potato. So those are really, I think, the main updates for today. Clean, clear, and simple. I think the semiconductors and the Russell 2000 continue to subdivide lower. Let's look at some market breadth indicators. This is the PMO buy all, sell all indicator. It is bottoming out in the ideal buy zone. We got a false buy signal here. Again, it doesn't always work all the time, just as we had a false buy signal here in February. But we're bottoming out. So it looks like the downside is more done than the upside. Eventually we'll get an ideal buy signal. That's great, that's good, but no buy signal just yet. Let's have a look at the summation index on a weekly closing basis. So I know it's only Wednesday, we still need Thursday and Friday, but here is the weekly McClellan oscillator for the S&P 500, going all the way back to 1998. And you can see there are a few occasions where this indicator drops below -100. That is the buy zone. Even for bounces, that is the buy zone. And why? Because you can see most of the time when we get those very low readings, we are getting close to buyable bottoms. Not always exactly there. During very steep corrections, it might take a while, but they are eventually profitable. That is for sure. Remember, the long-term bull market is still alive and kicking. I don't see yet a bear market. We need to go much lower. Please refer to my Friday update. Then if we look at the summation index of the McClellan oscillator for the S&P 500, it sums pretty much every day's reading to the next day's reading, or previous day reading in this case. And then you get a either increasing line or a decreasing line, because if the McClellan oscillator is negative, it means more stocks are declining than advancing in the index. Right now, this one is on a sell, meaning more stocks are declining than advancing, which makes sense because the McClellan oscillator is deep in the red. So more stocks are declining and advancing, supports the bearish thesis for lower prices, even if we get a wave 4 setup. New lows, how are they doing? Bad, doesn't look great. We had this nice little moment here of lower readings, but it never stabilized as we had here into 2020. This is the readings we want to see with a few occasional spikes. So this is not a good sign, also suggests lower prices. The market's not done yet. How we're doing with, I would say, the NEMO buy-sell indicator, VIX buy-sell indicator, and the S&P 500 buy-sell indicator. This is based on where the NEMO is in relationship to the Bollinger Band. I don't have data yet for today, but there is no buy signal yet for the NEMO. There's neither a buy signal for the VIX. What does the VIX need to do? The VIX needs to close above the Bollinger Band, then the next day close below the Bollinger Band, and the day after close below that level once again. So far, we haven't closed below it because the upper Bollinger Band is at 3096 and we closed at 3150. So close, but no cigar. And the same here for the S&P 500. If it closes below the Bollinger Band and then closes back inside it, that is a reasonably reliable buy indicator, but it needs to be aligned with the VIX and the NEMO. If we only get one, it's not reliable. If you get all three in a row, it's more reliable. Again, it's not a condition that works 9 out of 9 times, but maybe 8 out of 9 times. For now, I don't have a signal yet. So we'll keep diligently tracking that one. How we're doing on the put-call ratio, I don't know what the reading is for today, but this is the 5-day simple moving average of the put-call ratio, the equities put-call ratio. And as you can see, the 5-day one is really starting to increase. So that's good. And we're now at the highest reading of the 5-day moving average since the COVID crash. Honestly, it is still relatively neutral. I really would like to see this 5-day one spike this high. If we get these really high spikes, that is a very good indicator that we are close to a bottom. So it's moving in the right direction, but no why it's in the eye moment just yet for this indicator either. Supporting this thesis is the one of the put-call ratio of the 10-day moving average. It's the reverse. You can see it's still dropping. That means we're not at the low yet. We need to see it reverse, and then it goes back up. It's a pretty reliable indicator for short-term tops and also for short-term bottoms, but we don't have a sign yet that a bottom is in place. So that fits with the Elliott Wave count. So to revisit, the 1-2 setup on the NASDAQ100 is dead in the water, so we can forget that one. And then we simply move to the ABC setup, which aligns now with the Dow Jones and the S&P500 in the futures market, as well as further deeper declines for the semiconductors and the IWM, which I believe are subdividing. So these are the ideal Fibonacci targets. We don't have to reach it, not at all. We should ideally be great. So let's monitor over the next few days. Again, I still would like to see at some point a multi-day rally for this wave 4 and then a wave 5. These are the ideal Fibonacci-based targets. Doesn't mean we'll have to get there. As you can see here on the Dow Jones, we can also extend, we can also shorten a little bit, but that's what we start off with, and then we monitor and we adjust for it. Looks like on a closing basis, we need a lower low. And then for the wave 3/C, don't know yet if it's going to be 3 waves lower. Always, as usual, after 3 waves lower, expect at the minimum 3 waves back up, because that's the wave 3 then, and that's the wave 4, and then that's the wave 5. Same for the S&P 500. We haven't even reached the ideal C3 target zone, so this can still go lower. Levels are here to watch. Can extend. Don't know just yet what it's going to do. Futures market, let's have a look here. Futures market did do enough for the wave C/3 and could now win this wave 4, which can go all the way to 43.40. But if this is a steep correction, as I think it is, all the charts point that way, then we should not expect too high prices and probably a stall here at around 4,300. We should continue to make lower lows and lower highs to complete this impulse pattern. And once this is completed, there will be nobody left that's interested in the market. Remember, smart money is moving into the market. I hope so, if they're smart. And dumb money is moving out of the market. And that's how the rich get richer and the poor get poorer, because the poor are horribly at timing the markets. You need to enter when it's low and you need to exit when it's high. It has worked for over 100 years, so it's probably going to work once again. Wouldn't be surprised. The buy-sell indicators and market breadth indicators are all on a sell. Nothing is supporting a sustained new multi-month bull rally at all. So the Elliott Wave count is not yet, neither those market breadth readings. Some of which are getting pretty close to where I say these are very reliable, or reasonably reliable, low readings, but we're not there yet, because everything else is still too high or still on a sell. So with that, please have a look at the charts that will be sent out with this message or webcast to see what the downside targets are for the NASDAQ100, for the Dow Jones, of course, for the S&P 500, the futures market. And when we get a little bit more data on the semiconductors and IWM, we can start updating that one as well. So with that, thank you so much for listening. Thank you so much for being a valued premium member. If you have difficulties trading, please sign up for my ETF trading alerts. We've cashed in some really nice inverse ETF trades over the last couple of days. that could really offset some core long positions if one has those from way back, so to say. And it's always fun to get an email in your inbox that tells you what to do, so you don't have to think too hard every now and then. It can just be a simple, fun way to trade as well. So please keep that in consideration. Many ways to make money. That's all we like to do. So with that, thank you so much for listening. Thank you so much for being a valued premium member. It looks like we're going to start wrapping up this massively large correction soon. Wouldn't surprise me, maybe the first week of May, who knows? But I'm not a market timer. I just simply follow price. And once we've completed a ideal 5 waves down, I'm going to start to turn very bullish. With that, thank you so much. Take care, trade safe. See you all on Friday. Bye.